right along with our first panel of the day, which is hosted by Senior Partner at Cedar International Management Consulting, V. Ram Kumar. Ram, if you'd like to come up on stage and introduce your panelists.
Thank you, Robin. Good morning, ladies and gentlemen. Pleasure to be moderating the first panel of the day to a well-packed audience, as I can see here. The first panel is actually on a continuation of what my colleague Chetan presented and what our topic today is, which is NextGen Core. And we would be talking about powering through collaboration, innovation, and speed. May I invite my first panelist for the day, and I'm going in alphabetical order. Andrew Briscoe, Global Product Owner and Delivery Lead at HSBC. Andrew has about 20 plus years in the industry. He was previously the global, you can go that side, I'll stand this side. Thank you, Andrew. He was actually the global product owner for HSBC's Global Wallet. He was the Global Innovation Delivery Lead for and product development for payments and liquidity and network expansion. We have a lot to hear from you today, Andrew. Thank you. My second panelist for the day, Arjan Verbeek, co-founder and CEO at Perana Bank. Now, we have a very enviable background there, Arjan. I mean, 30 plus years of career across RBCs and Moody's and Barclays Capital, and the last role was MD at BNP before you said, let's create this perennial fixed for life mortgage through Perana Bank. So thank you again for being with us today. My third panelist for the day is someone who is not an unknown face in this forum. He's someone who has been quite active in our summits in the past and is offering, in his own words, the most technologically advanced and cost-effective retail banking solution in the market, which is inclusive, scalable, and third one was interesting, brandable. So, ladies and gentlemen, please welcome Nelson Wooten, CEO and co-founder of Saskara. Welcome, Nelson. My fourth panelist for the day is someone who is actually a fintech enthusiast at heart, someone whom I know for many, many years. And every time I meet him, he is always brimming with ideas that are ahead of his peers. Believe it or not, almost 12 years back, when I was actually on a panel with him in Dubai, the topic of the discussion then was bots, which was not so common those days, and he was at it. 5 years back, before everyone else caught up with it, he was conceptualizing and institutionalizing metaverse, much ahead of the rest of the world. And more recently, he got his company renamed to have a surname of AI, which is Kia.ai. And Kia, in the way he claims it, is to deliver digital solutions that enable financial inclusion, multi-experience, and generative, intuitive, predictive insights for smarter decisions. Ladies and gentlemen, please welcome Rajesh Mirjankar. And with these thought leaders here, I am Ram. I'm a senior partner with Cedar. Been in the industry for about 27 years and focusing primarily on banking and technology. And I'm here to learn a lot from my panelists here. So I'm going to start the discussion with you, Andrew, and or maybe I'll start with you, Arjan, because it's all about NextGen Core, and I think it's interesting to actually bring this topic here. I think we are talking about two things throughout the day. There's going to be a lot of discussion about quote-unquote disruption, right? Now, this disruption is actually caused with a a lot of customer requirements and needs, which on the one side. But we also have the idea that NextGen core in itself is actually helping banks to embrace and drive this disruption, right? And through the disruption, what one would call as industry innovations. So what would be your thoughts on that? And if you have some examples to quote on this.
Yeah, where shall I start? Start with the merger of four banks disappearing and becoming merged into the bigger ones, because the banking industry basically is cannibalizing itself. It doesn't know what to do. It's run out of ideas, frankly. And technology will disrupt that and make that all change. And in essence, if you go to the core of what banking is, it's basically two things. It's all having a current account and making payments everywhere quickly, the transactional side of it, which personally I believe will completely disappear. We will all start banking with the central bank at some point, and it's just technology does the rest. Right? That is, to me, inevitable. It'll be in the future. Future start tomorrow, which is a bit early. I think it will be longer than that. But at some point, might not be in my lifetime, that will be the case. And the central banks will love it because they control the money supply, they control economics, they control exactly what they now are worried about what the banks do. The second part of banking is where the focus will be in the future. And that will be customer service of lending, products that people need. Consumer loans, car loans, mortgages, etc. And then where will they get their money? They will get their money either from the central bank, on the terms of the central bank, or they have to fight for money with the customers. But that's going to be a very competitive environment enabled by technology, and the best people win. The playing field will be leveled up. The banks won't have the cheapest money anymore and be lazy about competition. Right? They have to actually work for it. So that's where we're going. And to do that, you need to have new technology. You cannot have what you have now. You need to have a very digital, flexible core where you keep up with technology. You'll never become legacy. So in essence, I see the bank as and this is how we platform ourselves, we create a middleware, and that's us. For the rest, we will just take the best of everything that we need and plug it in. And don't let them talk to each other, because that just takes away the flexibility to drop one, kick it, and replace it, right? We want to be always working with the best one out there. And there's one thing that you constantly see. The bigger something gets, the worse it gets, right? It just is happening with the banks, with software companies, right? The bigger they get, the more cash cow they become, and we can't do anything anymore. We take forever change requests, etc., etc. No, right? You become that, that's fine, but we'll change you without any interruption to our business. One database, no data migration anymore from one database of a system to another, thank you. Not gonna happen. So it's really that strategic analysis that we made when we set up the bank, and that's where we're going to build it out.
Interesting. The bigger it is, the more harder it is from your standpoint.
Will fall, really. Sorry. You're the biggest, I mean.
Well, that's going to be a central theme for a lot of discussion today, I guess. But I think I'm going to borrow one important aspect of what you just talked about, right? Where it's not just going to be about banks and central banks. It's actually going to be about a lot more players as we move along in the way banking and quote unquote money is going to play, right? Which brings me to a question to you, Arjan, and this is actually something that will actually to you, Andrew, and this is something which I would actually talk about the players in the value chain, right? Now, with embedded finance and banking as a service emerging, and something that you've been actually, spearheading for a while, how do you see this unfolding from a standpoint of different players in the value chain? I mean, here we're talking about banks playing a certain role and moving away from those roles, and new players coming in the system, and there are different stakeholders. So what does innovation from the standpoint of this value chain mean in the context of embedded finance and banking as a service?
Yeah, it's a good question. I mean, I think it's definitely multi-layered. There isn't one size fits all, and there are multiple players in the value chain. But what is key is that there has to be value and an equitable share of value for all of those partners in the chain. We are sort of very much seeing, I guess, from a bank's perspective, or both the technology partner as well, but from a bank's perspective, there are perhaps two opportunities. So firstly, in terms of, how can you acquire customers by embedding what we're doing today into a new channel. But then secondly, there's the opportunity to then to work with other partners to deepen the proposition that we already have. So it can be both in terms of deepening the proposition, the existing proposition, building out wallet share, but also in terms of a customer acquisition engine where you're partnering with the supplier, the partner, or the ERP system who's got that coverage. So that's it from a bank's perspective. I think if I look at, perhaps speaking for others in terms of the fintech or the provider, again there's two elements. Firstly, in terms of it's a new distribution channel for them. So for them, they can partner with a bank like HSBC and get access to our customer base and do that. Equally, if they already have that large customer base like an ERP platform, then they can dive much deeper into the proposition that they can offer those customers. But fundamentally, we mustn't forget it's about the customer, and what we're really doing is removing friction for the customer, giving them a richer experience in the domain in which they want to operate. Going to where they operate. They don't necessarily want to log on to the banking system at all times.
Removing friction is the central theme to delivering better customer experience. And I'm going to take that part to you, Rajesh, and we talk about friction in the technology angle, which is actually about making things modular and driving microservices, right? Which is the other side of the coin from a technology standpoint to actually minimizing friction, right? And this has been, as Chetan spoke a little while ago, and this has been in vogue for the last few years. How do you see this actually moving in the next, let's say, medium to long term, modularity and microservices?
I think it's imperative that it needs to take priority. When we look at the aspect of banks being able to scale in terms of new products that are coming up, staying innovative, as was mentioned, and staying relevant to customers. It's necessary to offer services at an agile pace. And hence the ability to have a modular structure where you're able to bring best of breed capability is very necessary. There's the other aspect of being able to look at a scalable infrastructure, because when you look at innovation and you do achieve the results that your business plan talks about, and if your IT systems don't scale, it has a much worse impact, not just in terms of customer experience, but you will see that in the last few years, especially in the last couple of years, large banks have got penalized large amounts for not having operational resilience. So I think it's come to age now to really look at new core implementations that will involve microservices, as well as looking at a modular approach when you look at product deployment or launching new products.
Here is a very interesting, again, going back to big is a challenge is what you're reinforcing from what we had Arjan said earlier. But I guess there is an interesting angle to what you talked about here, right? Which is when you actually are looking to evaluate a core banking system, and I'm going to bring that question to you, in a minute, Nelson, but I'm just inferring from what Rajesh commented, that when you are seeking to actually invest in a solution, you are seeking to address your needs as of that point of time, but you realize the challenges of scale as you grow up, and that's when modularity and microservices plays a role, is where I infer from what you said. And that's going to be the point I'm going to ask you, Nelson. I think there has been core platforms have evolved over the last few years, right? And as things have evolved, so have, let's say, the evolution is both because of and as a consequence of expectations, right? And they've also been drivers of some of the new expectations.
Yep.
So if a banker out here is to be looking at selecting a core banking system, what should they be looking for?
Okay, all right. Let's touch on a few different things. Modularity here is being used in two different contexts, and one is extremely healthy, and the other is a red flag. So, modularity in terms of an ecosystem, to Arjun's point, where you're able to swap in and out different suppliers if they're performing or not performing, I think is absolutely fabulous, right? That's excellent. And it deals with a challenge that banks have had with core banking providers for some time. When you buy your full stack from your provider, it's very little you can do to change. And the idea of building an ecosystem of different partners, modularizing that aspect of it, I think unlocks that and allows you, exactly as Arjun's saying, to swap out a provider that isn't producing or isn't providing for you for a new one. When we talk about modularity from a core banking point of view, and it's a term that's been coined in the market around products, I see that as a red flag. And I see that modularity as a red flag because it intrinsically means that the architecture around an account and its functionality are tied together. So these providers will sell you modules that are going to be deposit accounts. And you can buy the current account module if you need that, and the lending module if you need that, and maybe the mortgage module's a separate one. But when you have this scenario, what's actually happened architecturally underneath everything else is an account and its behavior are very tightly coupled together. And that might not sound like a problem. But imagine the scenario where the regulator or some other reason you need to change some small setting deep down in your product. And what inevitably happens is you have to regression test all of the accounts that you've got launched in that product module in order to make sure you didn't break anything. So modularity as an ecosystem, super good, really important. Modularity as a core banking architecture, that's a little more worrying.
And if I was a bank that I'm looking to select a core banking platform, should I look for a modularity at all?
I think. Look, you're going. This is an industry that's been plagued by buzzwords forever. You need to dig into the architecture and understand what's going on. It's great that we're talking about cloud native, but to me, cloud native means another step on from the stuff that we're even talking about today. People will claim their platform's cloud native because they've virtualized some old mainframe system and stuck it in the cloud. That is not cloud native. Right? Let me be very, very clear about that. When we talk about cloud native, we're talking about the cloud provider managing the operating system, a degree of the application layer, and actually all you're doing is loading into the cloud small snippets of code to be executed as and when they're required. A cloud native system built like that is a fraction of the cost of your existing core platforms. And if it isn't a fraction of the cost, that's probably because they've got tons of engineers backfilling and dealing with all the testing and the modularity. That might not be a healthy place for you to go, even if they are saying it's cloud.
Interesting. So we moved from modularity to another discussion on cloud. And I'm going to take this to you, Arjun. And I think this is a topic that I guess a lot of people here are going to be interested to know. As we move forward, if I was to ask you, pick one transformational feature that's going to become the new normal, what would that be?
It's going to be, as I mentioned before, this split. You take out of the banks anything that can be done but with technology, and you start adding the core job that they have, and that is to deal with the customers, to give them the products they need, design the products they need, and provide that in a most efficient way through the technology. And that is going to be transformational at some point, and that has started. And people don't realize it, but you picked it up there, and it was, great surprise, because most people don't see that actually the banking market is shrinking. We don't know what we need to do, and that is the beginning of the point where we are going to suddenly have the big banks having a light bulb moment that they need to work in partnership, that they need to start building the bank of the future in that the right modular way and not the wrong modular way. That is going to happen. And we already see it happening, because take mortgages as an example. One of the reasons that the banks are all gobbling each other up is because they need assets. They can't lend, right? They can't lend because of legacy tech, and they can't lend because they don't have the right technology that fits the regulatory framework. That technology needs to be lined up. And we put all our mortgages on a deposit-based funding bank. That doesn't make any sense. They should always be with the pension funds and insurance companies, because they're 30-year assets, 30-year liabilities, the basis of banking. And deposits are not sticky anymore. Technology has changed that. You go to a Blackstone or Raisin, and they will do the work for you, and all your deposits go everywhere else. So you even get in the future, your current account money just moved around, and be efficient. Any money you have, you can just select on the button. The banks can't rely on your loyalty, or it's actually not loyalty, right? It's just not being, can't be bothered, or it's too difficult to move your money around. That's all going to change. Technology is going to transform that completely. So the banking world is completely going to change, and I think the good ones will embrace that and will survive in some shape. They might become an ecosystem of partners with still a big brand, or they disappear. Right.
I think there were two important messages in what you said. One was about collaboration and ecosystem of partners, and I'm going to come back to that later. But there was another point that you made, which is about taking out of whatever is to be taken from the technology that allows for the banks to focus on what they should do. And I'm going to bring that to you, Nilsson. I think this is a comment that a lot of people have been talking about on what we call as hollow the core, right? And we're talking about, let's not keep everything in core, and let's actually bring things out and actually have features that, going back to microservices and modularity and the red flag, as you called. But I want to actually ask you, now, if you were to look at hollow the core as a philosophy, firstly, do you subscribe to it? And secondly, do you think it would sustain itself in the medium to long term, and why or why not?
Do I subscribe to it? Yeah, I do. I probably wouldn't describe it quite like that, but if I step back and think about what a bank intrinsically is, right down at the bottom, they're all the same. I know right at the top, they're all different, and I know we like, in fact, great to have HSBC here. That is a truly global entity, but banking with HSBC is local, right? It has to be local because it operates in a jurisdiction and with a local regulator and in a cultural context. So I have accounts with HSBC. My Hong Kong experience is completely different from my London experience for obvious reasons. So we talk about kind of banking being global, but it's not. It's an incredibly local thing. Building on that theme, if we think about what a bank is, it has some kind of product engine that delivers product down to its customers. It will have ledgers that store the customer's money and its money. It'll have integrations into local payment system. If it runs card products, credit or debit, it'll have an integration into card processors. And it may well have integrations into exchanges to pull assets into core banking. And that could be foreign currency, gold, coffee, stocks, shares, depending on what type of banking we're talking about. But that is the same everywhere in the world. Literally China, Chichester, Chile. That part of banking is exactly the same. Everything that sits above that, credit decisioning, user experience, regulatory AML and KYC, those are your differentiators as banks. That's what makes Bank A different from Bank B. But at the fundamental layer, banks at the bottom are all exactly the same. And providers like Cascada are building that future. Right? We see core banking as a service as the place that we'll end up being. So just like you buy infrastructure as a service off Amazon, you'll buy that base product layer, those ledgers, that local integrations off a provider like Cascada. Because everything you put on top of that is where you should be investing money. This bit at the bottom is the same for all of you.
All right, so now that he's defined the bottom line, Let me take this to you there, Andrew. And I think one of the themes of today's discussion is about innovation, right? And there is also an element of collaboration when it comes to driving something like embedded finance, because you're talking about multiple players playing a role. Now, in your view, and if you're talking about innovation as a theme, and that is being driven by what we see from embedded finance and banking as a service, how would you think the next stage of innovation is likely to be unfolding in the near future?
I think from an embedded banking perspective, obviously it's API driven. Now a lot of those APIs are in place, but it's making those APIs
Hold it closer.
Okay. It's making sure that those APIs are richer and not just supporting the core, how do I make a payment, but also how do I service a payment? How do I, in one of the use cases I have at the moment, we're working very closely with Oracle in the US on a partnership. And you know, as much as I would, and back to the point around what's local, what's international. I mean, our value proposition will be very much, you know, we're helping customers grow internationally, but there are still local flavors. Our US customers, as much as I would love to move them away from it, are still using checks. Most of the questions I get are around checks. So it's sort of building out that's absolutely not innovation, but it's, you know, you still need to support those needs because our customers have asked to be paid in checks. But in terms of back to your question, I think it's APIs, making those richer, making sure that we can both, you know, embed our services seamlessly in other channels. If we're working with, say, Oracle, that the customer of Oracle can become a customer of HSBC natively within that channel. Or another example in the UK, where we've just started working with Ember, who are a financial and sort of a tax service, so we can embed that service into the HSBC core offering and give them a richer customer-centric solution.
I think there is an element of glowing global and delivering local that is central to the theme of what you're talking about, and I quite love the Czech example because
there's an old strapline that HSBC had, which is long gone, which I can't speak to.
Well, as a matter of fact, I mean, I'm sure you saw the presentation that Chetan was making earlier. We're talking about from automated ledgers to core banking systems to API banking, and then going forward, I guess HSBC has seen it all from the years. So I guess that's important to keep in mind. But I'm going to take this theme that you talked about on collaboration and innovation to a third dimension, and I take it to you, Rajesh. In fact, the theme for our conversation today is NextGen Core, and we're talking about powering collaboration, innovation, and speed, right? At some layer, they all seems the same, but in some layer, you could see that one is a driver and one is a cause and the other is an effect, right? So if I was to ask you, then, you know, as someone who is a industry leader, if you got to define the pecking order from your standpoint, how would you define it and why?
So in terms of the order, I would go first with speed.
Okay.
And alluding to the point that I mentioned earlier about scalability, you find that times change and the volumes change. And today we have seen banks operate their systems sometimes at population scale. And that was unheard of in the earlier days. And I can give you an example about UPI in India. That's had about 58 to almost 100% growth rate in the first few years. Now the aggregate growth rate of 58% volumes per year. We term ourselves as a mid-sized player and in payments, and we still process about 36 billion transactions a year on the switches with the banks. Now that's volume that we are talking about in terms of scale as mid-size. Compare that with what's happening with other banks. It's nowhere in that range. There is one bank in India that deals with almost 48% of the national volume of that transaction amount. So when you get back and say, okay, can that scale for a particular bank? You then think that it is first necessary that just one product that can make such a difference has to be addressed. So that's why I put the aspect of speed before innovation for that purpose. The next part is that when we look at innovation, there is an element of innovation in addressing the speed part, as Nelson mentioned, about the aspect of bad modularity and good one. I take that case. And especially the hollowing of the core. He rightly mentioned that, there is the core that you need to address about saying the balances of how you update that. When you look at a simple thing as much as payments today, it is about updating a balance and updating the status saying that the payment is successful. Why do you need to involve the core that is managing your loans and your term deposits and guarantees to sort of go through that same load? And when you look at the CPU utilization, it's on the same machine, right? Regardless of how you address this of saying vertical scaling, horizontal scaling, you've still got a bad architecture. So I think the speed part needs to be addressed there. The next I would come to is collaboration, not innovation. Because I think when you say innovation, there are banks that have innovated too much by themselves and not been competitive. So I'm aware of many banks who've gone ahead and invented a product, not been competitive because a fintech could do it much cheaper. So when they go into the market, a fintech collaborating with another bank can do it faster, cheaper, and better. And while you're saying you're innovating, you got it a little bit late. So I would hence say collaborating is important to know the right business model you place yourself in, defining a role of what you want to play as a bank in a role in the economy, with the class of customers that you address and the class of customers you aspire to have. So collaboration, if we look at it, has been a gradual move of how you got to figure out a move from open banking, like Chetan said, to open finance. But I gradually see that moving to open economy. There is a way in which there will be changes to open banking, moving just from API application to embedded finance. So you will have the new buzzwords of tokenization coming in, where it's not necessarily the banking system that's addressing finance, but also tokens that have the embedded intelligence to carry forward that to the last mile. So in that way, I think collaboration is important because you then define what you want to innovate.
Got it.
And then you come to innovate, where you look at saying, how do you work with your collaborating partners? And what is the differentiating fact that you will offer together? But importantly, how do you focus on the role that you will play as a bank and make sure you got it absolutely right? I do see that in effect, you have DORA now coming as a measure of looking at operational resilience. But I think the next phase of DORA 2 will be one that innovation index of banks will be looked at to say that if you aren't innovating, that means your depositors are at risk. You could go down under. So
becoming stale. Yeah.
Exactly. I think that is an important factor that will soon come up to say that if you are not innovating, you can't be in the system imposing that risk on your depositors and customers.
Innovation index is the next thing you're expecting to see. Well, I'm going to open up the audience for any questions. But before we have some questions, just go around the table here. I mean, he says innovation index is the next big thing that's going to happen. What's the next one thing that's going to happen? It's a rapid fire, just a quick answer.
Yeah, no worries. I totally agree with innovation. I think for me, it's about utilizing technology to drastically reduce the cost base that banks are carrying.
So cost reduction and efficiency through technology is your pick.
It's not next, but what you're saying there with deposits being at risk, right? That's going to be a flag. Fraud, everything is going to be a problem for the regulators. So this comes back to my point before, payments, current accounts, they are going to be all with the central bank because that's safe, right? And then the rest can innovate until the hard accounts. Safer, as safe as it can be. Sorry, let's put it that way because nothing is safe really.
Are these central bankers in the room?
This control.
Right. I know that sounds, what Arjun's saying about that moving to central banking sounds like a huge, drastic revolution, but it's not. Places like Switzerland are starting to do this already, right? If you're a fintech, not a bank, if you're not a licensed bank, not a licensed deposit taker, just a fintech in Europe, and the UK follows this, right? We have EMIs and we have agency banks that do clearing. People like Clearbank, in fact. In Switzerland, even as a fintech, your money is settled with the Swiss National Bank, right? This change is coming and they're utilizing technology. because it's risk.
Yeah.
We are risk. The banks are risk, right? And actually, it's technology that's holding us back from kind of centralizing more. I totally agree with your vision there.
De-risk with technology. Okay. and-
Can I have one more on
yeah.
that? Sorry.
And as long as Nelson doesn't pluck it back from you, I'm
'cause
okay.
we set up a bank, and we have a bank that clears, or we have a banking that clears, and then it goes to the central bank, right? And even a bank that is a bank as a service, if it's not a clearing bank, it has to go to a clearing bank and then goes to the central bank.
Yeah.
Why have you got all these layers, right? They just don't need
Go
to be
straight
there.
to the central bank.
Just go straight to the central bank.
All right. Andrew?
I thought this was rapid fire. I just say, don't forget the customer. This is about putting the customer front and center. So from an embedded banking perspective, it's difficult. We're making progress, but it's allowing the customer to interact with their accounts, with their banking partners at that point of need, wherever that point of need is.
I think that's going to be a statement forever. Don't forget the customer, right? Questions from the audience.
What you were saying, Nelson, about banking services, the dirty little secret of banking is that most of the basic products are commodity products.
Agreed. Absolutely agreed.
So how do you differentiate as an institution?
You differentiate by everything that sits on top of that, right? I've just come back from a trip around Europe, and I sat with Deutsche Bank and challenged them on this, and literally, when you boil it down, you are all the same at the base level, but you're also very different in how you approach risk, the kind of customers you target, what that customer experience is, right? So that kind of notion of customer centralization, some banks do better than others. These are your differentiators, right? Paying X% interest on a current account is neither here nor there, right? The customers fall in love with the brand because of what they believe they're associating with. And that's nothing to do with your product, and it's nothing to do with your ledgers, and it's got nothing to do with your integration into
There
the
you
local
go.
payment system.
He's
So
brought
are
in
you telling me
brandability
that
in
the
there,
bank-
huh?
Are you telling me that the bank of the future is going to be a coffee shop with a strong box?
I think the bank of the future. I think right. Look. If you think about how technology has disrupted industries through media and music as an extreme example, right? When I was a kid growing up, we had something called Top of the Pops, right? And there'll be a few people here old enough to remember what that was. And that was really basically a list of the most popular songs in a country at any one moment in time. But what's happened to music as technology's made your ability to access, make, create, and distribute, you've seen a huge fraction, right? It's now like tiny little niches everywhere. Believe me, that's where financial services will go, because technology is making it cheaper and easier for new players to market. And that means that we can have differentiated at brand level, because financial services are regulated and there are only so much you can do between those two barriers. It all becomes about brand and value. And that's the stuff that sits above, not the stuff that sits down here.
Brand and value.
Well, I shan't
going-
ask who's the Taylor Swift of the financial world.
Yeah.
But to Arjun,
I just
You're-
wanted to answer one point. At
Yeah,
one point
right.
to this, because you're absolutely correct. I think you're completely correct. Why are currently the big banks the big banks? Because they have only one advantage: funding cost. That's it. All the products are commodities. Why can't challengers compete? Because they don't have people leaving their money on current accounts at 0%, so the big banks can be cheaper, right? Despite their cost disadvantage, their funding cost is still the driving factor. That will disappear.
what
Thank
you were
you.
describing is
Robin,
the relationship
I
between
can't
an
afford to
individual-
have another question. I have a gentleman and we have one more minute to go. If you don't mind, can I have the gentleman? There's a question there for him.
Oh, sorry. Thank you. I don't mean to be disruptive, but
This is all about disruption. Please go ahead.
cause more disruption. In the good old days, like since you were showing your age, let me also show mine. When we had manual ledgers and manual checkbooks and all that, a customer walked into the bank and walked out of the bank in half an hour with an account number and a checkbook. Now it takes minimum 15 days to 1 month. What speed are we talking about?
I'm going to totally, there's obviously regional variations on that, but I can think of at least 4 or 5 banks who have a fully digital onboarding system here in the UK and in other parts of the world, and literally my account number will be presented to me at the end of that process. In fact, my co-founder and I, Steve Round, sitting at the back there, his great idea back in 2013 was to build a digital bank. We did that within a minute. You had your account number and could pay money in. And actually, I'm going to mention the dirty AI because I think that's a good thing to kind of touch on, right? We at Cascada absolutely love AI and what it can bring to the table, but for me, it's about operational efficiency. Okay, and actually the reality is any bank here that has a digital onboarding solution is already using AI. It's just that we don't call it AI when we understand it. We only call it AI when we don't.
We call it AI when we don't. Rajesh, I guess that's some food for thought there. He says AI is when you don't know what it is.
Yeah, I agree with Nelson that when you don't understand what level of intelligence you're using and for what, you call it artificial intelligence. Otherwise, it will be computer vision, it would be decision trees, it will get a name. The unnamed one is artificial
I thought you were going to
intelligence.
say the opposite of artificial intelligence is natural stupidity. Once again, thank you everyone, and thank you dear panelists. I really appreciate your time and very valuable insights. Thank you.